The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Monday morning. We're kicking off the trading week, and markets starting in negative territory right now with the S&Ps off about 21 points, trading at 39.43. We get the NASDAQ off 57 for the tech stocks, NASDAQ 100. Dow off 158 points right now, and the Russell off about 12. All the indices pretty dramatic on Friday in terms of the acceleration to positive prices. Two of the equities in particular that stick out, though, as I talked about on that update, going to be an interesting open across the board, folks. We're going to spend some time getting into kind of what's going on in some of these trades. Remarkable when you think about the type of money involved and the type of firms that could be affected. Credit Suisse down about 15% overnight right now as they see a material impact for a company like that because of this trade and the unwinding going on and the exposure they chose to have. Viacom, as I mentioned, folks, and this is a reason why, there's always outlier risks, right? I got a call on the air some last few weeks or so from one trader. He had a great trade going on. I believe it was in Viacom. It might have been in Discovery, because they've both just been juggernauts in terms of accelerating higher on the acceleration of their streaming platforms in particular. You have Viacom, just going back to where we were in March, $11. You back this thing up on a 3-year weekly to see the full low. We're talking about $10. We were at $40 prior to COVID, and we just got back there in the span of, look at this. Look at this weekly bar that we had last week, folks. You take it all back in the span of 1 week. You take a year run from $10 to 101. You're right back to where you were prior to COVID at the lows we saw on Friday on Viacom. You jump over to Discovery. Discovery shares pretty similar action. You make a low. Look at that weekly bar of 34.60. You back things up on Discovery. We started the year in terms of 2020 off at about 32.89, almost to that level. You got a little bit of a bounce, putting it back on a daily to see the action. Now this morning, we're right with a bid ask where we were as of Friday. Just speaking as a fundamental investor, there will be a buy point on these equities, folks. The fear, of course, is are there more block trades to come? Is there more unwinding to come? We know how things can accelerate to the downside, but if you're a long-term investor, folks, start to take a peek at some of these. Doesn't mean that this stock won't get cut in half today. You're facing some serious exposure. But if you want to make a trade, maybe using cash where you're not using margin, you can't get executed out, you're willing to hold these shares for a year or two or something like that, might be an area that you might to take a look at it. You get Discovery with a bid ask around 42, right where we closed as of Friday. You got Viacom shares with a bid ask actually below where we closed on Friday. Not what you want to see. There's a lot of people like myself saying, geez, we were just at 100, right? Could this be a buying opportunity? Might not be the case just yet. We're sitting $2 below the close of Friday on Viacom shares right now with a bid ask about 46 to 46.33. You take a look at Goldman Sachs, okay? We're a little bit lower this morning on Goldman. There's their drop-off. Nothing too dramatic on Goldman. You're down about $6, maybe 2% or so. Morgan Stanley down about $3, a little bit more action on an $80 stock right now. Morgan Stanley down about $3.50 on their equity. It's just remarkable. Some of these hedge funds, how the risk that they take on reverberates around the entire industry. Folks, this is the argument for regulation. My goodness, the amount of regulations we have, right? And still you have firms, and I say firms, this isn't a firm, this is a family office. Okay, and it gets into derivatives. It gets into instruments that they're using that are unregulated. Of course, this is always what happens, folks. Billions in secret derivatives at center of Archegos blowup. So Archegos, a family office run by this gentleman here, Bill Huang. Now, he already got in trouble for insider trading. So he was forced to tie into a family office, basically just a hedge fund that's not taking outside money, to the tune where Goldman wouldn't even do business with this guy up until 2018 when it just got too good to say no. And Goldman started doing business. Goldman looks to see an immaterial loss, which is the reason why they're only down about 1% to 2% today. You have material losses to the tune of Credit Suisse, which is why you're seeing them down about 15% today. But as recently as 2018, Goldman would not even do business with a firm that had $5 to $10 billion in equity, that was trading as much as $50 billion, it looks like, in equities. But nonetheless, they couldn't say no for much longer. They were lured by tens of millions of dollars a year in commissions that a whale like Huang paid to rival dealers. They step in 2018. Goldman even emailed clients late Friday to inform them that it had in fact been one of the banks selling. The email, a copy of which was seen by Bloomberg, detailed a total of $10.5 billion in trades. Now, take into consideration, they were selling $10.5 billion in trades, and they have an immaterial loss. What's it going to look like when you talk about Credit Suisse, where they have material loss? What kind of funds are they dealing with to have a material loss? Now, they call him a Tiger Cub. He worked for Julian Robertson at Tiger Management. Huang set up Archegos as a family office after shutting down his own hedge fund. Again, I believe that had to do with insider trading. There you go. 2012, pleaded guilty on behalf of his firm, Tiger Asia Management, to charges of wire fraud. Material non-public information, reaping $16 million in illicit profits, 2018 to 2019. Always remarkable what they're actually able to get these guys on in terms of $16 million when they're managing billions upon billions. But at some point in the last 2.5 years, he got into Goldman. He got it done. Now, getting into what he actually did here, okay? So Nomura Holdings, also a big one. They're down about 15% as well. It ties into that they're using swaps or so-called contracts for difference. It seems like these swaps, folks, I mean, basically all they do is they get around regulations set up. Isn't this the same exact thing that happened with the insurance crisis? In terms of insurance companies were using swaps that weren't regulated, so they didn't have to have the capital structure that they might have to if they were actually providing insurance. The whole thing fell apart. Now we have this firm that, you know, normally if you build a stake more than 5% in a U.S. listed company, you have to disclose that position and future transactions. Not if you're using swaps. That's not the case with stakes built through this type of derivatives apparently used by Archegos. So he was building monumental positions. Somehow things got away from him. He got a massive margin call, and he probably got it a little too late where he didn't have the money to cover things. It's a full liquidation going on. The companies behind him that were providing that margin already getting hit in a big way. It looks like when you have companies like Credit Suisse down 15%, Morgan Stanley, Goldman Sachs. It's quite an achievement to take down multiple banks overnight for material impacts. But you got whether Goldman, Morgan, forced to sell billions of dollars that he's accumulated. One reason for the widening fallout is borrowed funds that investors use to magnify their bets. Yeah, a margin call occurs. The market goes against the large leverage position. We've seen it before. Archegos was probably required to deposit only a small percentage of the total value of the trades. They're using such sophisticated derivatives, financial products, folks. You're using swaps. He's building positions in publicly traded companies that would normally trigger the type of disclosures to make sure the market knows that one participant is building a massive position, pretty much to protect the greater good of the market. So somebody isn't just coming in secretly building massive positions to maybe overtake a company. Maybe it's just the exposure that they risk throughout it. Some margin calls on Friday triggered losses as much as 40% in some shares. They're talking about Viacom. They're talking about Discovery in particular. We'll talk a little bit more about this because it seems like history repeats itself, folks. I'm not sure how swaps are still out there to this degree after what happened already with. Stay tuned, folks. We'll be right back after this break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
All right, welcome back, folks. We got the S&Ps off about 22 points right now. We got the NASDAQ off 58. Markets right where they were when we kicked the program off at about 9 a.m. this morning. We got 12 minutes to go until the opening bell. So we're going to stay with this story a little bit just because of how deep it really goes. So one of the headlines out this morning, I would not look for them to rally yet, folks. I'm going to be paying attention even as we do the show. We'll pull up some of these equities right at 9:30. But you're seeing orders still going through on some of these equities in particular. So in the latest of a series of massive trades that began on Friday, a block of about 45 million shares of Viacom priced at $47. Okay, so Viacom closed on Friday at 48. This block of shares was traded at 47, so a discount to the close of Friday. This was traded Sunday night. Okay. Yeah, a person said the trade was launched on Sunday via Morgan Stanley and struck at a 2.6% discount to Friday's close. So Friday was not the end of this, folks. Sunday night, last night, you had, Morgan Stanley selling 45 million shares at almost $50 a share. Folks, for every $10, you're talking about $450 million. So what is that, about a $2 billion exit position in Viacom alone that wasn't exited as of Friday? It's still reverberating in a big way. Now, as I mentioned, though, you're getting upgrades because of the, just demise of these companies. So you have, after plunging 50%, you got an upgrade by Loop and BMO of Viacom. Tencent Music, they also suffered a $1 billion share buyback on Monday after its stock slumped 34%. So there you have the equity itself saying, hey, we'll buy back shares at this price. We think it's undervalued. Who knows what we're going to see on the open here, folks? It's going to be pretty interesting. You have Viacom and then jumping back to Discovery. Now, Discovery didn't have that block trade reported, which is why I'm guessing you're up about 20 to 30 cents so far this morning ahead of the opening bell on Discovery. But doesn't matter in a big way of how this. We'll see how it opens, folks, because you're talking about $5 to $50 billion potentially jumping around. So Credit Suisse, Nomura slump as banks tally Archegos damage. Goldman sees an immaterial impact after a massive margin call getting into their business. Now, what I wanted to look at real quick is they're talking about swaps, right? In terms of what's happening, super unregulated business. Swaps. Over-the-counter equity derivatives occupy one of the smallest corners of this opaque market. Swaps and forwards linked to stocks had a gross market value of $282 billion at the end of 2020. That compared to $10.3 trillion for swaps linked to interest rates and $2.4 trillion for swaps to forwards linked to currencies. I mean, look at where we're talking about here. You're talking about the black is the first half of 2020 gross market value of these swaps. The pink is 2019. You can see how they've paired, but boy, swaps all over the place in interest rates, FX as well. You get into equities, and it's a tiny portion, but you see how that can reverberate in a big way when things go bad. Regulators have began clamping down on these in recent years because they're concerned the derivatives are too complex and too risky for retail investors. How about just being too complex and too risky for the market? When you have this type of reverberation and you have solid companies like Viacom, like Discovery, just getting pummeled because of basically unwinding trades going on, because you got bad trades going on that have been financed by multiple banks in Wall Street, when you think about it. You have Goldman down here. They had turned it away for a while, but they couldn't say no to the millions of dollars that they were saying no to. And you get back to this upgrades and buybacks, but precision warnings, I'll get there. Friday's sell-off came as no surprise to many analysts and traders, pointed to a surge in some of the stocks leading up to the trades. Warning from strategists on a ferocious rally are now proving prescient. I got to get that one. Viacom, Discovery, yeah, they had skyrocketed, folks. It's just a lesson in terms of if you're in some of these trades, you got to take some money off the table eventually, folks. I mean, you go from $20 in November to $80, and you know, I would have taken some off the table because you never know what's going to happen. It'd be a bummer if you rode that thing all the way back down and gave back a 400% profit. You look at Viacom, it's similar action. We're going to see where they open. Discovery a little bit higher. Viacom on the heels of a $2 billion unwinding trade last night through Morgan Stanley, still trading lower in a big way for Viacom. I mean, we could go on and on, folks. Some of the stories that this thing writes, remarkable when you look at where they are in terms of what's going on. You know, they mentioned here, now this story, I mean, Bloomberg's got like 4 different articles all out from this morning talking about it because of the damage that this one firm may have done. Now, you're talking about the forced liquidation of $20 billion of positions linked to the firm roiled from stocks of Baidu to Viacom. We talked about Discovery, casting a spotlight on the opaque world of leveraged trading strategies facilitated. It shouldn't be so difficult, folks. We've seen the carnage that unregulated swaps can do before. I don't know why they still exist in such a capacity, but the reason why probably is because the people behind them are the billionaires upon billionaires, folks, and they got lobbyists, right? And they're out there making sure that they can kind of play their financial games and putting all that regulation at risk. Somehow they're able to play that game in an unregulated environment. I mean, look at much of Huang's trades remain unclear. This is the part about the open that's going to get interesting. But market participants estimate that his assets had grown to anywhere from 5 to 10 billion to total positions that may have topped 50 billion. So if you only have 5 to 10 billion of equity, you got a $50 billion position, that position starts going against you. You only got 5 to 10 billion. You only have 10 to 20% equity in your position before the house is on the hook for the rest of the losses. That's what you're seeing today on Credit Suisse, down 15%, on Nomura, down 15% in Tokyo on Monday as well. Nomura shares tumbled 16%, said in a statement that established amount of its claim against an unnamed U.S. client was about $2 billion. They're going to have to go after them for $2 billion. Well, not sure how you go after them if they're going to be out of money with the rest of the banks going after them as well. So we're going to see what happens, folks. We got 5 minutes to go into the opening bell. It should be an interesting one, to say the least. I'll be interested to see how those Viacom and Discovery shares trade. Baidu, it's across the board. We'll see if they got more sells out there. We're going to find out today. Jump into the story of last week. So this story out last night, we'll keep our eye on it in terms of the Suez Canal, but oil hovering right at around $60 right now. Yeah, down about 52 cents. You see the volatility on oil chopping around, but all things considered, right? You put this thing on a daily. Yeah, we've had a pullback from $68, but you've just been chopping around right near $60 right now on oil, $60.48. The Suez Canal hopefully looks to get opened back up sometime in the next week. We will find out. Gold trading a little bit lower today. You put gold on a 3-year weekly just to get this full run up. Yeah, and I think they did. My dad's in there, and I haven't caught the article. They got the boat off. So the Suez Canal looks to be free. You're going to see a bunch of shipping containers going through there. Interesting to see how that might factor into oil today. So gold, quite the run we had from the March lows of last year to the high of 2,089. That high made the week of August 3rd. We've pulled back. Talked about it a couple times, folks. We had a nice area back in April to June where we chopped around. The 618 retracement of the entire run is at about $1,700, $1,696. That was an area of support back last year. It looks to be an area of support potentially right here as well. We're sitting right near that area, 1724. Look for that area to hold support of about $1,700 in that gold contract. All right, folks, we got an open. This is going to be interesting. We got a March open. Last Monday. See how the Viacom is doing. We're going to come back right at 9:30 for the opening bell. Stay tuned, folks. We'll be right back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps minus 16 points on the open. Tech stocks minus 28 in the NASDAQ 100. Checking on some of the stocks with volatility on Friday. You got Discovery up a bit, up about 4.5% to $44. Keep it in mind, folks. Yeah, you're up 5% right now. You were just trading at $78 prior to this debacle. Putting it back on a 15-minute. And Viacom, let's see where Viacom is, sitting pretty at down 2.3%, kind of right where we were pre-market, waiting. I think the market's waiting to see if the pain is done in those two equities, as the unwinding may not be finished just yet. What else we got going on? Yeah, so the Suez Canal looks to be open. Suez Canal traffic resumes after cargo ship Ever Given is moving yet again. So a view shows the container ship Ever Given after it was partially refloated to begin with, and looks that they've cleared the way and ships back open. Remarkable when you think about the type of traffic that goes through the Suez Canal. We all kind of know it, but now it gets reiterated when you see something like this. These big shipping containers trying to make it through these tiny waterways to avoid having to go around the entire continent of Africa. But nonetheless, that looks to open back up. Quite a debacle when you think about what's it been, almost a full week since that thing got stuck. But nonetheless, looks to be back open now. A couple other stories jumping around that caught my eye. Bed Bath & Beyond. So adding to their executive suite from the likes of Wayfair and Walmart. So Bed Bath & Beyond announced two key hires for the $3 billion e-commerce business. Of course, Bed Bath & Beyond, they've been in trouble in a big way, to put it lightly. So you have Jill Pavlovich, previously head of exclusive brands and merchandising for the online furniture retailer Wayfair. So she was exclusive brands and merchandising. She's going to be the vice president of digital commerce at Bed Bath. Jake Griffith, previously general manager for sports and fitness at Walmart, named vice president. Now, Bed Bath & Beyond up about 1.6% today, probably on those two hires. You look at this thing, I mean, we got all the way up to 53.90. Is that right? Yes, this was the Reddit run. I was like, what is going on here? So we got up to 53.90. We're trading at 30. Reddit got their hands on it. You put this thing on a 3-year weekly. We were down to $3, folks, at the lows of COVID. You put this thing on a monthly, and there you see the pain we've gone through. We were sitting at $80 in 2014. We were back at that level in 2015. You basically just barely avoid bankruptcy, and this thing's caught a bounce. I mean, right now you're talking about a market cap for Bed Bath & Beyond to the tune of $3.6 billion. And they got a long way to go, folks, in terms of their business model entirely, in terms of the rental fees that they pay, the structure that they are doing business in, and the goods that they're doing business within. You know, I guess they're going to try and shift it to e-commerce, right? At a time when you're bringing in somebody from Wayfair, online retailer, that was in charge of exclusive brands and merchandising, but they got a big job ahead of them. I'm not sure how you compete in that sector where you're selling sheets, you're selling things that Amazon sells. To put it, I mean, there's no, they don't have a big enough niche to kind of segment themselves, even online. I don't know why you're going to go to an online. Why would you visit the online site? This is my own personal bias in this. Why do you visit the online site bedbathandbeyond.com? I don't even think that's their website, but you get the point, versus just going to a site like Amazon or Walmart or Target to buy the types of products that they have at a company like Bed Bath & Beyond. I imagine they have a big obstacle ahead of them, but they got two executives to help further that. Southwest, how about buying 100 Boeing aircrafts, the smallest 737 MAX planes? It's going to convert firm orders for 70 Boeing 737 MAX 8 planes to the smaller model. The first 30 MAX 7 jets are scheduled to be delivered to Southwest next year. The MAX 7 is slower selling compared with the more popular MAX 8. So Southwest said it would convert firm orders for 70 737 MAX 8 planes to the 7 smaller model. Boeing shares checking out their action today. Boeing's had quite a run recently, putting this back on a daily, taking the Fibonacci off for a little clarity. We rise up to 278. We give it back down to a low of 231. Since then, we're up 3.3% today. Boeing shares, Southwest, some of the airlines. Look at Southwest bumping up near the all-time highs we had. Not all-time, excuse me, right? Yeah, not all-time. We're almost at all-time. We really are almost at all-time highs. Remarkable. Southwest, the all-time high made December 2017 at almost $67. You got a monthly. This month, we reach a high of $62.76, putting it back on the daily. These domestic airlines, folks, rightfully so, they've been on fire. I've been talking about JetBlue. JetBlue does great routes between Tampa and Boston, so I'm a little bit biased there. But as I mentioned, you're thinking about doing travel, folks. I know JetBlue in particular, just because I've looked at them. You can book a flight on JetBlue through April 1st, so you only got a few days left, where you can pay no change fees, no cancellation fees. If you make that, if you're thinking about traveling domestically, check out those deals, because the demand is here, folks. It's ramping up. It's coming. And those deals are going to go away, because these airlines, I mean, they're Southwest, right? Check out JetBlue. JetBlue shares up to $21.73. We're back a bit. You put this thing on a 3-year weekly, we're right back to pre-COVID levels. You put this thing on a monthly max. Yeah, JetBlue's had some volatility in both directions, but you're sitting at a pretty comfortable level outside of the COVID low we had, all the way down to under $7.50, as domestic travel looks to get back to normal in the next couple months in a big way. And then anticipate some huge demand, folks. I mean, there's just going to be pent-up demand like we've probably never seen, at least in my lifetime, when you look about flying and so forth. Now, you look at some of the more international airlines, right? Delta Airlines, let's put it on the 3-year weekly. As you see, not quite up, right? Leaving room to get back to prior to COVID, because the international deal not quite there versus domestic. You got Delta about $12 off of their highs. You're solid 20%. When I say highs, I'm talking about the pre-COVID levels. Delta's about 20% off of where we were trading at prior to COVID. You got United Airlines, a little bit of a different story there. United was trading at $90. We're still trading at $57. They got a long way to go to get back to where we were prior to COVID. We covered Delta, American Airlines. Almost there. We were at about 30, so you're still quite a haircut in terms of $7 off, more than 20% off of where we were prior to COVID. International travel is going to take some time to get back to normal, folks. Europe's having a real problem right now with their vaccinations, let alone you start getting into the poorer segments of the world, and how those people, are they going to be traveling, right? Are we going to be allowing travelers internationally into the U.S. once we reach a level of hopefully somewhere near herd immunity? There's a lot to come as we figure this out over the next year or two. But domestically, things look to be well on pace to get back to normal in the next couple of months. It's going to be an amazing summer, folks. That's my feeling. But it's quite a binary shift from where we are. We're going to go from this binary shift of, you know, wear a mask, social distance, everything is shut down, to if you're vaccinated, and hopefully we're all vaccinated if you can in the next couple of months, you can be out. Stores are opening back up, restaurants, hotels, flights, Florida, travel, summer travel, all that stuff. It's coming in a big way, folks, and I'm excited for it. I already got my first shot, got my second shot coming up April 13th. I encourage you, if you're able to, folks, get out there, get vaccinated, be safe. We'll open back up this economy, because, folks, it's not happening until we get vaccinated and open back up. And we got some big expectations. They all start with Friday. We got non-farm payrolls for the month of March on Friday. They'll be looking for an addition of about 600,000 jobs. That's going to be the first month of a few big months. They'll be looking for some job gains. Friday at 8:30 in the morning should be an interesting one. But it's only Monday, so we got a long way to go this week. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got a chart of the S&P up here. Quite a little pop. We got this a 15-minute bar. Let's put it on a 5-minute bar. We'll see the action we had on Friday. And this morning, you open 9:20. It starts 9:30. We open at about a price point. Let's get that 9:30. Well, 9, yes. And we'll zoom it in. 9:30, we technically opened at 39.48, but you see the ramp up. From 9:15, we were trading at about 39.41. We're about 16 points above that level right now in the S&Ps. And folks, we got a good week. What I didn't realize, my dad's in there in the Tigers Den. He's all over it. He's telling me we got a holiday on Friday. How did I not realize that? We have a holiday on Friday. I believe it's Good Friday, right? Let's see. Holidays. Yes, it is. Good Friday. Market is closed Friday, April 2nd. I thought we were getting non-farm payroll, and I think we are. Not sure how that factors in. Maybe we get it on Thursday. We'll find out, though. But markets, they're going to be closed Friday, April 2nd for Good Friday. We'll see how that shakes out. But Wednesday, folks, Wednesday, we are not closed. The market is not closed, and Larry Pesavento is not closed. He is going to be hosting a live trading webinar, folks, Wednesday from 9 a.m. till 2 p.m. Eastern Time. He'll be in there for 5 hours. The total cost is $295. Now, if you're a current subscriber to Fibonacci 24/7, you get a free month of that service, which will be applied to your next month. If you're out there and you haven't signed up for Larry's service yet, that is included. So you get to go to this course for 5 hours. That will be archived. You also gain access to Larry's Fibonacci 24/7 trading service. He's sending out videos. He's sending out charts all week, folks. All week, folks. He puts out a great report on Sundays. If you sign up, you gain access to the archives. You can check that out. This will be going on Wednesday. And what's also cool here is that we decided, and Larry decided as well, if you attended the one that he just did in December, so if you attended his most previous live trading webinar, if you signed up for that and paid for that in December, you're going to get to go to this one for free. So there'll be a great turnout no matter what, folks. There's going to be a lot of traders in there. It should be a great time in the room, people asking questions, the whole experience. That'll be going on Wednesday, 9 till 2 Eastern Time, Wednesday, March 31st. I encourage you to check it out if you haven't yet. Larry does a great job. He's going to be in there live trading from 9 a.m. till 2 p.m. Eastern Time, a half hour before the market, and he'll be in there till about 2 o'clock. Larry, he doesn't do a lot of trading in the last couple hours of the day, which is why he decided 9 till 2 o'clock is the best course of action for that 5-hour trading webinar. But he's going to be talking about everything, folks. You know, ABCs to build an expectation for the next sequence of moves, talking about risk management, what most traders do when a pattern fails, why this guarantees they can't win, and what to do instead. The 3 patterns that help identify shifts in supply and demand, not talking about an ABCD. A trend change pattern that gives you early entry into the trend. You'll learn what to look for, how to prepare, when to pull the trigger. These are all points that Larry sent over when talking about promoting this live trading webinar coming up Wednesday. I encourage you to check it out on the front page of TFNN.com, folks, and that will be archived. The full 5-hour webinar will be archived for all that sign up and attend, so you can watch that as many times as you'd like. If you can't be in there for the full 5 hours, that will be up there immediately following that webinar, so you can check that out on the TFNN page. Okay, what else we got going on, folks? Let's jump around to some of the stocks. We got the S&Ps down about 5 points right now. Let's take a peek and see how some of those stocks in particular are the most watched. We got Viacom sitting still in negative territory. Remarkable. You got this type of pain, folks, in terms of from $100 to $46 on a company like Viacom. I mean, you're talking about Viacom right now. You pull it down, you're a $29 billion company. I mean, we just wiped out almost $30 billion, not almost, probably $30 billion of equity got wiped out in 1 week. Folks, March 22nd, 1 week ago today, you were trading at $100. If you're on margin, all your money's gone in Viacom. That's not a company that most people would think if you buy on margin, you could lose your entire investment in the span of a week. Discovery, you go from basically the same thing, $80 down to almost $35. Now, Discovery is flat right now in the session at about 42. You got basically Viacom essentially flat as well. Let's jump around to some of the banks in particular. You got Goldman rising off the lows from 315 to 324. You're barely negative, about 0.8%. You got Morgan Stanley shares down about 3.5%. A little bit more pain for Morgan Stanley so far this morning at about 77.17 so far this morning. Jumping around to what else we got going on. Let's take a look at some of our FANG stocks. You got the tech stocks down about 47 points right now. We got Amazon shares up about 0.9% so far. We got Microsoft shares checking around down about 1%. What's up with Microsoft? A little bit of a sell-off following that opening bell acceleration. Microsoft shares down about 1% right now. Excuse me 1 second while I pull up what we got going on. Let's check out Google shares. Google shares down about 0.5% with the tech stocks. Facebook shares right now up. Facebook can't hold Facebook down no matter what the market thinks. Really remarkable. I mean, look at this. So the last time I drew this consolidation, I can tell, was January 26th. And you're still in it, but boy, you are bumping up. Let's activate that drawing. Let's take it and draw it across. And as you can see, folks, I mean, that was just, it's almost a form of linear regression. If you're familiar with linear regression, right, it has to do with taking the squares of the differences. It's not exactly lining up the lines. You could say that this is an area that kind of combines the highs and the lows, and this is the area that would provide resistance, right? We've been below that area a couple times. We've been above that area a couple times. But in general, this is your consolidation area. Maybe you can make the argument that the upper boundary line is a little bit higher. You could. I mean, maybe you make the line. This is where, you know, it's an art, not a science, folks. You know, and as we do this now, maybe this is kind of our linear regression line. Nonetheless, Facebook bumping up against the upper boundary line, and then we'll see how it reacts to the $300 price point. We're trading at $288 right now on Facebook. Some of my favorite stocks, let's take a peek. Disney shares pulling back out of this channel line. We'll look for Disney, see if they can accelerate again higher. I am still a Disney bull, folks. We're holding kind of this 183.40 area, which was the high we had back in January. Looks to be an area of support. You'll want it to hold that level. I mean, you see it was first an area of resistance, then it became an area of support on February 22nd. Also an area of support when we had the lows of March 5th, and we're back down in that area yet again. Quite an acceleration on March 25th. We got Uber shares. And Uber and Disney, of course, we have a couple of those in my newsletter, Rocket Equities and Options. You have Uber shares right now, 54.22. Both of these equities, folks, Uber and Disney, we've been in them for a while. I've been in them for a while. You know, you're going to get some consolidations here as the market opens back up and we deal with some problems of valuations, as in the market trying to figure out what the proper valuation is for a company like Uber at a time when their Uber Eats business has accelerated. That business may suffer a bit in the next few months as we all look to get outside, eat at restaurants, not get food delivered at home. And Disney shares, of course, the market trying to figure out whether this valuation of getting as high as about $200 is fair just yet, at a time when I don't even think Disneyland in California is open yet. If it is, been closed for about a year. Movie theaters not quite there just yet, but it's going to be priced in pretty soon, folks, because movie theaters, it's going to be a great summer. That's my feeling. You know, movie theaters, they might be packed, and they might be packed justifiably in good way, as in we might be reaching levels of herd immunity. I believe the last number I saw over the weekend was at about 13% of Americans have received their second dose, so that you could call them fully immunized or fully vaccinated. You're at about 26% receiving their first dose. Those numbers expected to ramp up as many states opening it up to general population over the next couple months. It's only March. By the time we get into June and July, the market's going to be looking for a real difference, and that's why those jobs numbers, they're going to start to matter, folks, when we get into March, April, May, and June. We get over COVID, and the market looks for normalcy to return to some of those employment numbers. Stay tuned, folks. We'll be right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P's negative by about 13 points so far this morning. Tech stocks off about 74 points. NASDAQ 100 trading at 12,890. We got the Dow off about 42 points now. Quite the acceleration on the Dow. The highs we had on Friday in the futures market, 32,984. We get up this morning to a high of 32,975. You're talking about 9 points away from the high that we had on Friday in the Dow. We backed off a bit, 32,911. Taking a look at Boeing. On that news from Southwest, you got Boeing shares up about 2.8%, trading at $251.77 so far this morning. Checking around to some of the fan favorites out there for Reddit. GameStop, talk about the volatility. GameStop pretty calm today at about 185, up 2.4%. We'll jump to AMC. AMC shares trading at $10.50. Now, AMC, still, folks, I don't get it. You know, this is Reddit in a big way. AMC, you back things up on a 3-year weekly. Prior to COVID, we're trading at a price level of $7. A year later, still living with COVID, the movie theater chain trading at $10. If it doesn't make sense, folks, keep those spikes up on your shoulders. There's no way that a company like AMC is worth 50% more today than they were as of prior to COVID hitting that market. All right. Doesn't mean that the market might take a while, as in the market's never wrong, right? The price of AMC today is $10.50. Yeah, we might be right. I might be right that this thing's overvalued, but it doesn't mean that those Wall Street bet traders can't keep this thing at $10 or higher for the next year or two, folks. And that's the problem with the market. When you think you're right and you think you're smarter than the market, boy, it can teach you a lesson in no time. There's one gentleman, Bill Hwang, who's learning that in an epic way today. Probably should have learned it already when he got in trouble in 2012 for insider trading and got banished to a family office. But when you're dealing with billions of dollars, folks, Wall Street, they just could not say no to all those fees. And we got big, big problems in a big way. I mean, Credit Suisse, how about down 13% for Credit Suisse on that pain? I mean, it's just a fall off, folks. You pull up the analyzer. They got it in here. Yeah, you're talking about they're worth $27 billion right now. Well, they just lost billions of dollars in market capitalization because of one client. Whew. We're going to see that trade. We're going to see a lot of articles about this one. We need some regulations for these swaps, folks. They're insurance, they're derivatives, and they're unregulated. You're seeing the pain they can cause. Thanks for tuning in, folks. Stay tuned. Basil's next. Live programming all day at TFNN. Have a great Monday.
Building wealth trading